It has been one of the most speculated stocks in the Nasdaq over the recent years. Some have said that it might be the next Tesla. Most people believe that it might do well now, but it's eventually going to burst. Regardless, this is one of the most speculated stocks in the stock market in the recent years. As one of the heavyweights in the burgeoning industry, Lucid is also one of the few companies actually having a product. As time went on, the stock's price action, along with the investors' hype and hopes, went through some huge roller coasters. And some are still wondering if it's time to jump in this bandwagon. In today's video, we will look at Lucid and to see if the company still deserves to have a place in our portfolio. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description below, as every help is greatly appreciated. So over the past few days, the price action of Lucid has went through a lot of volatilities. We were initially hoping that it's going to go up to like $20, and then it went down. Right now, I think that it's stabilizing around like the $9 level. And really, things at the current moment, yes, they look stable, but I want to say that I would like to see Lucid going beyond $10, because that is for me an acceptable baseline to consider further purchases. And if we look at the long-term tendency, even though the company only has a few years of track record, I need to see the stock going up. It needs to do more than just stabilizing around the current the current level. Because here's the thing, and we're going to talk about this maybe in more of a detail in a few seconds, but what the company does is not just they sell cars, okay? They also sell dreams. Same goes for Tesla, same goes for Xpeng, same goes for NIO, same goes for many companies on a Nasdaq. It may sound very out of whack, it may sound bizarre to say this, but basically when you buy a piece of equity of a company, you don't just buy the pure assets, you're also buying the goodwill. You're buying the expectation that this company and also the sector in which it works is going to be significantly larger than where it is now. And that they're going to be like that this company is going to do very well out of it. That is the overall expectation. If this cannot be done, then it's kind of pointless to speculate in the Nasdaq arena. And Lucid is that sort of company. We're not selling, things that are super tangible here. We're not selling things that are only based on the deliveries or the whatnot, even though it's becoming this. And that in by itself is also something that we need to remember. But for the time being, let's stick with this notion of dreams. Can this sector grow? Can this sector become exponentially larger in the years to come? Are we going to see hybrid and EV cars so prevalent in our daily life that our investment today is going to grow regardless of the short-term price actions? Personally, I think that there's a real possibility for this to happen. If we think about it, in a little bit more than a decade, around 2035, many countries around the world would forbid the sale of new combustion engine vehicles. Of course, whether this can be done when push comes to shove, no one can tell for sure. But if over the last 10 years, the price of EV cars and of hybrid cars has gone down significantly, so much so that nowadays a hybrid car is almost the same price compared to a combustion engine vehicle. If that can be done within a decade, imagine what can be done a decade from now. So it's not beyond like the reasonable imagination or speculation to say that yes, this can be done. Lucid, Tesla, and every single company with like a skin in the game regarding EV, they can do well. So, in that sense, I would say that we need to eventually start to see this sector actually getting bigger. I'm willing to wait. I'm willing to be patient. I think that, it's not going to play out within the next 3 to 5 years because the world is currently probably entering into a recession. And we cannot say for sure whether this is going to affect or almost like break this trend. Okay? Because, of course, if you talk about decades from now, are we still going to stick with EVs? Maybe there are better technologies by then. And then that's going to like disrupt the sector entirely. But within the next few decades, I think it's a real possibility for EVs to become more prevalent. So, in that sense, Lucid remains relevant for like the state of the economy, our investment portfolios, and so on. Regarding the company's news, well, recently, of course, there have been a lot of speculations about whether PIF is going to buy Lucid and what's going to be the premium, if any premium. And also, there were some talks about like the delivery numbers not doing as well as the expectation. These, I would say, are very much the noise that we might need to ignore going forward. If PIF is going to buy Lucid, so be it. I'm happy to sell my investment at a loss probably, but even then, it's fine with me. But if PIF doesn't go through with Lucid, I might actually buy from that point onward, because this is probably going to trigger some downward pressure for Lucid, and I'm more than willing to buy in this kind of new environment. So the current company's momentum, I would say, is that they're trying to hold the line in a sea of bearishness, which of course isn't easy. And at some point there were, speaking of the news, there were also talks that maybe Lucid needs to sell some new blocks of shares because they might have some cash flow problems. This is some of the worst nightmares of startups. I don't think that this problem is very pressing, but it needs to be dealt with. And my understanding is that it needs to be dealt with swiftly. So this is why, Lucid is a company for whom the downward pressure remains real, and it's going to remain present as long as they don't turn an overall profit. And we're going to talk about how financially the company is doing, but basically they are financing a significant chunk of their operations, but not all of it. There were still some expenses they're not able to cover. And remember, they are currently in the emphasis of, they currently have an emphasis in growing beyond anything else. So, I mean, if they have to grow, they have to spend money to make more money in the future, right? So they cannot run out of money at this current time. So what can they do if they don't want to take on more debt? Well, they're gonna dilute the shareholders. Sucks to say, but that's usually how things go. At the same time, I mentioned earlier that we are currently in an ocean of bearishness, and this is outside of our control. We don't call the shots of what the Fed can do or cannot do, how much money should be printed or should be absorbed, what the interest rate should be. We don't call the shots on war and peace. I doubt that many of us even read the novel War and Peace, but that's beyond the point. We can also not really predict how the supply chain is going to be. And also, how the head honcho of this whole nascent sector, Tesla, will be doing. Every time I look at Tesla, my feeling is, every single rebound is lower since 2 years ago. So I'm not necessarily comfortable at saying that the sector will see some new recovery very soon. But that's okay, because we are in this with the mentality of an investor, right? We're not here to speculate on a short-term trade. And if you do that, not exactly the smartest move. Okay, not exactly. Unless you want to do like more complex operations. For example, with options, if you want to do covered calls or covered puts, either or, it should be fine. And also, if you're speculating on the volatility, yes, I was at a loss of word with volatility. Then you can also go ahead with straddle tactics. What do I mean by this? Well, if you think that a year from now, Lucid's share price is going to be significantly different from now, you basically buy 2 sets of options. You buy a set of put option, then you buy the equal amount of call options. If one of them is in the money massively in the future, meaning if the volatility goes massively in one direction, then you're going to make money. If it loses, then, not if it loses, but if the volatility doesn't pick up, if we're still looking at the current phase of stabilization, then you will lose a predictable amount of money in the double premiums of the 2 sets of options. So it's really up to you to determine what you want to do. But personally, I think that the volatility may start to pick up in a couple of years. Right now, we're still in a bit of uncertainty. The bulls want to push up, the bears want to push down, but both of them are not really willing to fully commit just yet. And because of that, we're not going to see any sort of significant moves unless there are fundamental changes from the investment environment. For example, if NATO joins the war, well, that's going to have like a cataclysmic effect on a market. If WTO starts to break down, it's already kind of clustered, okay? It's already kind of blocky, so to speak. But if WTO starts to collapse, then yeah, we're going to see even more instability. And then the market is going to move massively down south. And it might take several years before it comes back. Now, we also have come down to the question of, for whom is Lucid really good for? Lucid is good for people who are willing to invest in the company and who think that the sector is going to have a bright future ahead. It's not very good for people who want to make quick money. It's not good for people who don't want to put money in companies for the long term. And it sounds obvious, but for me, if you tell me that if you put the money in now, it needs to stay in for the next 20 years, I'm not so sure about that. You know what I mean? I'm relatively uncomfortable about relying on the EV technology only to carry us over beyond 10 years, I would say. And as far as the trading the short term goes, I'm also not so cool about that. So really, it depends on your own style. Me personally, I'm willing to invest in Lucid over the next 5 to 8 years, because by then most of the volatility that I was expecting would come back. Okay. The other thing is, if Lucid goes down to $5
am I going to invest? That's probably the lowest that I'm willing to go. So over the next 3 years, I predict that if there's any sort of negative volatility for Lucid, $5 might be like the absolute floor. If it goes beyond that, I will no longer buy more. Okay, but $5, I'm still willing to add to my position. And if we look at the S&P and the Nasdaq, I think that we might not have seen like the beginning of the recession just yet. Like the stock market is still relatively undecided. It has wiped out any sort of gain since 2020, but even back in 2019, people were already talking about potential, like, how can I put this? People were already talking about very persistent rumors that we're entering in a recession. So this is why, like, I wouldn't say that it for sure will not happen. This is kind of dumb, okay?
Lucid Motors, also known as Lucid Group, is an EV manufacturer that is poised to shake up the industry with its cutting-edge technology and designs. While other EV manufacturers have been making strides in the industry, Lucid stands out with its advanced battery technology, the dynamic designs, and the commitment for a sustainable business model. One of the key differences of Lucid Motors is the battery technology. It is known for significantly longer range and faster charging times compared to the competitors. Its car, Lucid Air, is capable of traveling over 500 miles on a single charge and charged at 20% in just 4 minutes. This sets the company apart from the competitors like Tesla. Another differentiator for Lucid Motors is the aerodynamic designs. The company's first vehicle, Lucid Air, features a very sleek and nice design that not only looks stunning, but also helps to improve the airflow and the efficiency of its energy. Lucid Motors also incorporates lightweight materials like carbon fiber into the vehicle to further improve the efficiency and the range. This attention on detail sets the company apart from other companies who may prioritize function or economies over form. In addition to the advanced technology and design, Lucid is committed to sustainable business model. The company uses renewable energy sources to power its production facilities, and it's committed to reduce its environmental impact throughout the entire life cycle of the vehicles. This commitment sets the company apart as well. There is also another aspect that I would say is what separates Lucid from the other ones but is now more blurry, which is its focus on luxury. The company's first vehicle, Lucid Air, is a luxury vehicle sedan boasting a spacious and comfortable interior, advanced driver's assistance systems, and a host of other luxury features. This focus of luxury sets Lucid apart from other companies which may prioritize affordability over the premium features. If we look at the company's long-term tendencies, it's not hard to see that the bubble that gave so much hope to traders around the world has now bursted. The market is no longer willing to blindly follow the latest hype, and sometimes I would say that it's also because it cannot continue this bubble forever. I mean, the industry is facing some significant headwinds coming its way, and at some point, the PowerPoints are no longer enough. We have to see profits. The market has long predicted that there will be a bearish market after such a prolonged bull market, and that most stakeholders believe that it's going to be a very rough patch for a few years. The market peaked twice in the past, and if the first peak was caused by pure hype, the second one was triggered by the rollout of actual products. Lucid remains a company that, as an investment, has a lot of value. The main question in everyone's mind is when should they enter in the stock? The long grind to lower price levels is likely caused by the market trends rather than the company's fundamentals. So in that sense, things are not as alarming as they may seem. On the other hand, we should remember that sometimes, even if those grinds don't have an actual fundamental reason, they can still last a very long time, bringing the title to an unbelievably low price. Hyliion and PaySafe would be good examples of this. Lucid Group, an electric vehicle manufacturer, has a strong financial performance in 2022. The company reported revenues of around $200 million for Q3 of 2022, a significant increase from the $232,000 in Q3 of 2021. This has mainly been caused by the launch of Lucid Air, the company's first vehicle, which began deliveries in late 2021. Lucid Air is a luxury electric sedan that has been well received by consumers and that has helped to establish the company as a massive major player in the industry. Currently, Lucid has a negative net income caused by the fixed costs and other operating expenses that should be absorbed once the volume picks up. Overall, the company's financial figures paint a picture of a company that is growing its operations but lacks a little bit in discipline of cost control and needs to scale up the operations to start having positive cash flows. Now, let's also talk about the shareholder composition, because it is something that's quite important to determine if the company is good for trading or investing. Given that 72% of the total float is owned by the institutions, this would mean that the price volatility should be lower than most other stocks. The reason why this might be the case is because institutional shareholders have far more diversified portfolios and they can tolerate the short-term volatilities. Another behavioral difference is that institutional shareholders tend to be more active and involved in the corporate governance. They're more likely to vote on important matters like mergers and acquisitions. They also tend to be more vocal in expressing their opinions on companies' directions and performances. Retails, on the other hand, tend to be far less active. They may not get involved, they may not vote, they may not be informed of important decisions to begin with. They just hope that they can yield a profit from owning a share. The short interest in Lucid has been increasing in recent weeks, meaning that more and more investors are betting against the company's stock by short selling it. The short sellers borrow shares of the stock and then sell them in the market, hoping to buy them back at a lower price later and to return them to the lender, profiting from the difference. As of most recent data, the short interest represents about 7.5% of the total shares outstanding. This is a moderate level of short interest. It's also worth noting that it has been increasing in recent weeks, and this can be a bearish sentiment amongst investors. Now, if the company has been reporting strong outlooks and results, this could lead to a short squeeze. I mean, things are not really that clear-cut in the real world, but generally speaking, people would come in if the fundamentals are good. If more people buy, then the shorts would have losses. The more losses there are, the more compelled the people short positions want to recover. It's important to note that the short interest is not a guarantee of a short squeeze, but it's a metric worth monitoring for the investors. It's also worth considering that the short sellers may have valid reasons for their bearish sentiment, and a short squeeze may not happen, regardless of how many stars are being aligned. So overall, what is my personal recommendation for Lucid? Based on my analysis that I just made, I believe that Lucid is good for investing, and it's good that we start buying over the course of the next couple of years. This means that if we buy, we must buy within small batches. We don't buy in large batches of things. Okay? And also, my personal expectation is that Lucid's volatility should pick up, and it should pick up in the right direction, meaning higher up, within the next 5 years. If it happens, my personal profit taking would be somewhere around, 30 to 50%. Because let's be real, this is NASDAQ. This is not savings account. The risk that we have to assume is higher than the average. And we have waited like 5 or 6 years by then. If I want to take profit, it has to average to around 6% per annum since the year that I bought it. So this is why I would say that 30 to 50% is my profit target.
and I expect to keep it 5 to 8 years from now. Within the next 5 to 8 years, in other words, within the next 5 to 8 years, I plan to sell it. And my personal exposure is from 3 to 5% or 5 to 8% at top max if you're risk tolerant.